Good evening, ladies and gentlemen. Thank you very much for coming here. We've just announced our first quarter earnings. And as is our usual practice, we will request Mr. Chandrasekaran, our CEO and MD, to give you an overview of the quarter. And then we will take questions. So can I request Mr. Chandrasekaran?
Thanks, Pradipta. Good evening to all of you, and thanks for being here. And before I share with the numbers, I just want to tell you that in the current environment, which is a very dynamic environment, we have delivered another spectacular quarter. We have grown across markets, across industries, and across service lines. As I will articulate in a few minutes, all our investments are coming through, and we are able to win engagements in many of the future technologies that we are investing in. Just to share with you briefly the numbers, our revenues for the quarter went up 12.1% on a sequential basis in rupee terms to 14,869 crores. On a year-on-year basis, it's almost 38%. In US dollar terms, the growth translated to 3% up to $2,728 million. And volume growth was 5.3% overall, and if you look at only the international business, the volume growth was almost close to 6%. And the operating profit for the quarter again went up 11.3% on a sequential basis and almost 45% on a year-on-year basis. As you know, this is a quarter in which we give wage increases, and we also had applied for a significant number of visas. The visa fees also went up. Considering all that, we were able to mitigate any dip in operating margin and used the currency gain in mitigating that, and we are almost flat at 27.5%. The net profit on a sequential basis went up 11.4%, and again on a yearly basis 38% to 3,281 crores. And the employee addition was as usual healthy. 13,831 people were added gross, and the attrition remained in check. On IT services, it was below 11%, 10.9%, and overall it was at 12%. And the utilization for the quarter went up to 81.3%. And in terms of markets, the markets did very well. Latin America grew almost 18%. On a constant currency basis, every other market also went up excluding India. North America grew almost 3% on constant currency basis, 12% on a rupee term basis, and UK went up 25% on a rupee basis, and Europe went close to 10%. And India showed a decline of about 7% on a CC basis. That's the only market which had a decline. From an industry point of view, all our industries showed growth. In rupee terms, a very healthy growth, also in constant currency growth. And on constant currency basis, retail did 8.3%, and telecom, which has been a laggard for a long time, grew 7.6%. And BFSI, again on a constant currency basis, delivered a 5.3% growth. So it's a very satisfactory growth rates across industries and markets. From a services point of view, BPO, infrastructure, and global consulting, and enterprise solutions all led the growth. Every other service line also grew. And in terms of clients, the healthy part of the quarter performance is the migration of clients. You will see a very good addition in terms of 1 million, 5 million, 10 million, 20 million, 50 million clients across the board. And we added 29 new clients. And in terms of the new investments that we have been making, we saw a number of engagements that we won in mobility, in big data, in social, as well as in our platforms like HR BPO, F&A BPO, analytics BPO. And those are some of the deals that we won this quarter. So overall, a good performance, very secular, and I'm happy that it's well distributed, both from an industry perspective and a market perspective. Those are the initial comments I'd like to make. I'm happy to take questions. Thank you.
First question from Kritika Saxena.
Hi, sir. Maha, as Chandra said, despite wage hikes and visa cost increase, you've been able to mitigate that and you maintain margins at the current levels. What was the exact rupee appreciation benefit on margins for this quarter?
See, the margin, let me give you the figures that I normally give, which is exchange rate impact had a 2.76% increase. The impact of increments was 2%. And that they essentially took away, and balance was all the other factors and so on, in terms of productivity, all that.
Okay. Chandra, also BFSI in constant currency terms, how was the performance this quarter?
5.3%.
Up.
Up.
Okay. And your commentary, because we've been hearing a lot of noise about how BFSI is cautious, how clients are significantly cutting down spending. What is your commentary? Are you still confident about the fact that it is stable? And
I think, if you look at what we have been saying from the beginning of the year, I think we kind of interacted at least 3 times. Once in January, when we announced the results, where we said that customers understand the macro is going to be volatile, it's going to be dynamic, and in that environment, they are making their plans. And we see a big role for technology, both in terms of growth initiatives and also in terms of efficiency initiatives. And that is playing out. And again, around March, we talked about the softness we experienced in terms of discretionary spending and the project slightly getting pushed. But in March, we said that we are beginning those projects to ramp up, and which we confirmed it again in April. I think the whole thing, the way it is playing out, is pretty much in line with what we have been saying so far.
So also, what about pricing for the quarter? What is the pricing impact on numbers, and going ahead, is it stable as you had?
So I think we have a volume growth of 5.3%, pricing drop of 1% this quarter. And we've always said that you will see that kind of a volatility of 1% for various reasons in terms of services mix sometimes one-off drop in pricing. So nothing unusual. It's just a matter of fact. You need to take it on board.
Okay, one last question, Ajoy. Then you're maintaining the guidance on hiring that you've given for FY13?
Yes, we said 50,000 and we are maintaining that.
Arjun Chaudhary, NDTV Profit.
Hi Chandra. My question for you, in terms of your outlook in terms of demand and from a pricing perspective, how are things looking like that? And also, what are the current challenges in the current economic environment that you foresee?
I think I would just like to maintain the same commentary that I have been giving for the last couple of encounters with you. It is to say that the macro will be what it is. It continues to be dynamic, and no one is expecting that something is going to change overnight. In a manner of speaking, I have also said, once you have said this is the new normal, we should expect that this is the way it's going to be. And companies recognize that globally, whether you talk to customers in Europe, UK, Latin America, US, or in Asia. I think everyone understands that this is the way the macro is going to be, and every company, the plan that they make in terms of technology is made in this environment, and we think, and that is something that they are able to execute. Okay, it's very unlike the 2008 situation, because last 2-3 years, every company, every corporation, including us, have been going through this. So that's what it is playing out. So in that context, I continue to maintain that technology has an important role to play, and our customers are executing to their budget and their plans, and efficiency projects are coming up, risk management projects are coming up, digital projects are coming up, multi-channel projects are coming up, and we just need to partner with the customers with the right capability, and that's what is happening.
Right. This one last question now. General Motors' decision of reverse outsourcing, is it a cause of concern for the IT industry?
So I can't talk about IT industry. I'm in a TCS press conference, so let me talk about TCS. In general, we don't make comments about any specific client, but on this instance, I would say that there is no cause of concern.
Thank you.
Vidya Sridhar, Newswire 18.
Good evening, Chandra. One, I just wanted to confirm, what is your growth in the BFSI and the telecom sector in the quarter?
BFSI grew on constant currency terms 5.3%.
Okay, this is on a sequential basis?
Sequential basis, 5.3%. And telcos grew 8.3% on a CC basis.
Okay.
So both
Yeah, go ahead.
achieved a growth rate which is, telco grew 7.6%, retail grew 8.3%.
Okay.
All the three verticals grew more than the company growth rate.
Okay, and what's your outlook on that sectors going forward? Do you think this sort of I know it's quite uncertain, but then what would be your outlook on these sectors? How do you see growth panning out in the coming quarters?
So we can't give guidance, and I would just like to repeat what I said just now. And so there are no specific negativities that I can give, but at the same time, we just need to continue to execute and continue to partner with clients on whatever initiative that's important to that particular company. And there are opportunities.
Also, Chandra, what's the outlook on margins? How do you see margins panning currently? Do you think the current margins would be sustainable and we can maintain the current margins? Or?
Let me make a couple of comments, then Maha probably will add. The first thing that I would like to say is that this is a quarter in which we have had a huge benefit due to the rupee depreciation. At the same time, we have had three important headwinds. One is we gave an average wage hike of 8% in India and 2 to 4% in international markets. Second thing is we added 19,000 plus people in Q4, and all of them didn't come into the company during the full quarter, but now they've all come into the company for the full quarter. This quarter we have added additional 13,831 associates. Majority of them have come during the quarter. All of them have come during the quarter. There is some came in April, some came in May, some came in June. So the cost of recruiting such a large volume of people, number of people, and their training costs, all those things also have come in. That's the second headwind. The third is the visas. We have applied for a significant number of H1 visas, and so the legal fees and all those things that associated with that is the third headwind. And we have been able to mitigate that with the help of the currency depreciation, the benefit that we got. We've been able to overcome this and have been almost able to deliver a flat margin at operating level, which I think is pretty credible. The teams, both operating teams, the finance teams, have done a fabulous job in terms of doing it, and we have not cut anything on growth. We believe that we've got to continue to invest, whether it is in terms of recruiting people, whether it is in terms of making sales investments, or in terms of anything associated with infrastructure. All of those things we have continued to go ahead. We've got a huge capex budget. Many of our campuses are coming, and we're getting into more new buildings, and those depreciations come in. So many things are happening. In that environment, we've been able to deliver a flat margin, which I think is pretty credible. 20 basis point drop on that on such a high level. So which is very credible. So given that, All I would like to tell you is that we are very disciplined. We are focused on growth, but we are equally focused on delivering right margin.
And just a last question, take on the volume growth. You've been able to give a much higher than probably what people were talking about or were expecting in the volume growth front. How do you see that, at least in the coming quarters? As in, not a ballpoint number, but generally an outlook on volume growth.
I think in terms of the outlook, I think I have already said, we are going to repeat our same position, what we have maintained for the last 2-3 quarters, two quarters, 3-4 meetings we have had, and I think we are just maintaining the same stance. I think we entered the year with certain learning because we went around, met with customers, large number of customers, took inputs from them, and we keep continuing to meet those customers, validating those, and what they said is what is playing out. So it's better to keep talking to the customers, listening, and make course corrections whenever is necessary. And I think that's the only way to play in this current environment. The environment otherwise, keep reading newspapers and you see TV channels, sometimes you don't want to get out of the bed.
KJ Benichan, PTI.
Hi. You said that India declined by 7%. Is it across the sectors, or has there been any particular sector that led to the degrowth in India?
See, we have said for quite a bit of times that India continues to be volatile.
Okay.
And ups and downs between quarters, and we expected to do better in India than what we did, and for a variety of reasons the India revenues have declined on a sequential basis, but I think that's the nature of the market, and still we don't have a good mix of annuity versus discretionary, and we keep working on changing that till such time that we just probably have to live with this volatility.
And the growth for Europe, which is near 10%, was it outside the euro area or the rest of Europe?
It is the euro area.
Euro area.
That's what we
So we give UK separate anyway.
One second.
Heart of Europe. Growth comes from heart of Europe.
Britain, it is 25%, you said.
UK is 25%.
25%. Europe, around 10%.
Yeah,
That is euro area.
euro area.
Well, it may or may not be euro area because there are different currencies. If you take Nordic and so on,
It's
different
all euro,
currencies,
no?
but they
It's all euro area.
Europe, yeah.
All are euro
Not
area. Eurozone.
currency.
It is Eurozone.
And what about the visa or
Huh?
the visa issue that has been in the US?
Which is the issue?
Visa.
Visa issue?
That's different from the class action.
Yeah.
Which issue?
The case regarding the visa class action.
No, there are
There is no visa issue. There is no visa class action, sir.
It's the employee class action.
no, there is no visa issue.
Okay, Kenan.
Chandra, just wanted to check if you still reiterate that TCS might do better than the 8-12% projection by NASSCOM. One question. And the second question is that given the election year, do you think for this fiscal TCS will increase on-site hiring, especially in the US?
So on the first question, see, we gave the statement at a certain currency level at the beginning of the year. And at that level, we will still confirm that we will deliver ahead of the NASSCOM estimates. No, I think whatever is the currency level, okay?
Various currency levels, yeah.
Okay, because various currencies are there. At that level, we will definitely deliver. Dollar, the way it moves up against rupee, and euro, the way it moves against US dollar, etc., that keeps varying every quarter. One quarter it may be disadvantages, another quarter it may be advantages. So you need to calibrate it and then see what it means. But on the basis of the currencies in which we made that statement, we still stick to that statement.
About hiring in US.
Hiring in the US, yeah, please.
Yeah. Hiring in US, I think, see, if you look at last couple of years, we have been hiring on-site in US significantly. And even in this quarter, we have hired on-site, and we'll continue to do that.
So what level of rupee dollar are you? What level of the rupee against the dollar did you say that you will?
No. You see, the projection that were given were at the dollar level. So there was no currency, but the point that I think both of us were trying to make was that cross-currency impacts were not taken into account. Cross-currency impacts have come later. So, and it is not, so when NASSCOM gave 11 to 14%, it assumed a certain cross-currency, not the rupee kind of.
It's not the rupee dollar, it's many euro dollar, sterling dollar and all that.
So at what levels do you think you will continue to be better than the NASSCOM estimates? If you can give us the figure.
No, all that we'll tell you is that NASSCOM made a projection on a certain basis, right? 11 to 14%, which was as on the basis of what was prevalent in whenever they did that. It was January, February, or whatever the time frame they did that. At that cross-currency level, whatever it was, we would, even if you take this market, euro had been somewhere around the 1.35 and so on. Today it is at 1.22, and therefore if you compare the dollar level, it is not appropriate. That's all that we are saying.
So we are not making it complicated. Take the 2-3 currencies, just as long as they don't move very dramatically, and you're okay.
Aradhana from Reuters.
Hi. My first question was, I know that the consolidated attrition rate for this quarter was 12%. What was it in Q4?
Q4 was 12.3.
Okay. And my next question, what is TCS doing better than its competition? Maybe pricing?
In terms of retention or in terms of...
Moving on to the next. In terms of...
I have told you an elaborate story then you're asking me. I think, the strategy is playing out. First of all, our relevance to customers in terms of the full services offerings and the customer migrations across revenue bands are happening as we would like. Second, I think a number of investments that we have been making, be it the new technologies like mobility, cloud, big data, analytics, all those things that we're making now, or be it the platforms. For example, the insurance platform which we made a bet on is coming off now, and it is delivering numbers. Then the other platforms are now beginning to win us deals. But all these things are long term. You don't make these things with a view to earn revenue next quarter or next year. Some of them will take 3 years, some of them will take 5 years. I think we continue to identify those opportunities to make those investments and then keep working very hard in making sure that those pay off. And our footprint geographically, we have made a lot of investments, we continue to make a lot of investments. And so the overall number of steps that we are taking is all paying off.
Are you seeing any delay in decision making by clients?
No.
No. And I know you said you won't comment on specific clients, but does TCS have any exposure to GM?
You already answered. I'm not commenting.
I was just trying my luck.
Amol Z Business. Okay. Shruti, Financial Express.
Chandra, I would like to know your capex plan for FY12.
Capex plan for
Capex.
Yeah, we had given that figure for this whole year, right? Yeah. We had said that it was 4,200 crores of rupees.
At Q1, how much did you do in Q1?
We are spending in line with our plan. And so beyond that, we don't give on a quarterly basis.
Okay. Also, wanted to know, you mentioned that the visa hike has had an impact, but the currency helped mitigate it. How much was the impact of visa hike, fee hike?
It's not a fee hike. All I said is that there are 3 headwinds. One, in terms of the wage hike we gave. Second, in terms of the number of people we have recruited last quarter and the number of people we recruited this quarter. Third, in terms of the number of visas that we applied. So all these three things have contributed to put pressure on margin. But we have been able to collectively mitigate it with the currency benefits. I'll leave it at that.
Could you say how much the cost has gone up for the visa?
No.
No, we don't give that.
Okay, just also wanted to understand your growth in North America and Europe has been, of course, satisfactory, but growth in India is you've already answered that, but even in other sectors, the growth has not been so great, other regions like Asia Pac.
Asia Pac is good, Latin America is good, every market has been good, India only has dropped.
It's not dropped, but it's muted as compared to your growth in North America and Europe.
No, India is dropped.
Yeah, no, India has dropped, but
decline.
how about Asia Pac and India?
Asia Pacific is quite good. Asia Pacific is at almost constant currency 7% plus.
No, Asia Pacific.
No, Asia Pacific is muted. Sorry,
yeah, muted.
So, any reason as to why this
Latam is
Asia
Latam is good, yeah.
region has been like
No,
because you said you continue to invest across all.
We are continuing to invest in Asia Pacific. I have no concerns on Asia Pacific. It will do well going forward.
Okay, just last question regarding the forex strategy, hedging strategy. It's for many IT firms, it's become very short term now. So, what is your?
No, we had said earlier that we are hedged up to the third quarter end fully, and we can continue to that's the position. What we have also said is that we are using instruments which protect a certain rate, and anything upside is left open for us to take the benefit.
Thank you.
Shivani, Business Standard.
Hi Chandra, congratulations. A couple of questions. You said pricing has dropped 1%. Could you elaborate more? Is this again across the clients you're seeing? Is there some pressure, or is it again, a client?
See, as I said, the 1% swing can happen. It is a combination of multiple factors. So if you really disaggregate, then you start looking at here 12 basis points, here 10 basis points, like that. Definitely one is the services mix that definitely contributes. There may be one-off engagements where in execution we would have lost a few basis points in pricing because it would have been a large engagement where we wouldn't have probably delivered at the desired pricing, desired margins, maybe a drop there. So small things can happen here and there. So as I said, structurally there is nothing to report, and if there is a concern on pricing, then I would come out and make a statement. And it's just the combination of several factors and one-off. I think that's what I would like to say.
Any demands for discounts from client you've heard?
That is always there, right? If you are my customer, you will always want on price cuts. So that will always be there. I think, see, margins is a function of multiple things. Your ability to price correctly, your ability to create a value proposition so that you can command a premium, and also your ability to execute, not only in terms of the right business model, but also in terms of bringing the tools and everything else that you have got. So it's not a very simple equation to say that, because many of the engagements we do also are not straightforward rate contracts. We get into managed services, then the contract structuring itself becomes very, very different. Then you get into a contract like the platform contract, which is totally outcome based. In the insurance platform, we charge the customer per policy. So it's getting a little more complex than simply saying whether there is a demand. And there are some cases where there will be demand, and you just need to work with customers and go on. But by and large, we don't see pricing as a concern at this point in time. We won't be able to increase it, but I think there will be a swing of 1% this side or 1% that side. That kind of a swing can be there, but we are quite comfortable at the pricing level.
On the discretionary spend, when we had met recently the CII, you said discretionary spend does seem to be stable. Any change in that in the last 1 month or so?
No.
So that remains
Stable.
The other thing I wanted to know, you said that the growth, new engagements and mobility, social, big data has been growing. Could you give us, in terms of the deals that you have won?
So you see the press release, we've given a whole list.
Oh, thanks.
I know this question will come up. Page 2.
Priya Seth, Hindu Business Line. She's not here? Okay. Yasir Pitalwala, Financial Chronicle.
Hi Chandra, a couple of questions. Just to clarify on the pricing front, I mean, are your clients really asking you to share part of the burden by saying that, you know, you'd also need to take some bit of hit on the pricing? And therefore, do we expect to see a steady sort of erosion of pricing for not just the company but for the industry as well?
No, I think there is no, no, the answer is no, straightforward answer is no. And I don't think that business happens like that, okay? I think you are held accountable for what you are engaged for. And clients will hold you accountable for what you are engaged for, and they need to, and they should. And we need to excel in delivering what we are engaged for. And that's the focus, but it is not about discussion on pricing or anything out of context. That's never true. And even today, for the right service, for the right value proposition, you can get premium pricing. I've always said that. But there may not be such projects with every client. There will be such projects with some clients. And there will be some projects which you will be able to execute. There will be some projects where there may be opportunities, but maybe you don't have the skill sets to do it at this point in time. So that's the way to look at it.
And in terms of order cancellations, are we seeing as an industry, and particularly for TCS, this trend of order cancellations pick up because of the noise around anti-offshoring both in Europe as well as US?
We have not had any cancellation. We have not had any discussion.
You don't see that as a significant risk?
See, I always have to go by data points, right?
Sure.
I can't go by macro news.
Last question, in terms of, because of this noise around this whole subject of offshoring, are you facing increasing demands from clients to either near-shore a greater percentage of the contract which is there, or in-source, or kind of move towards a capital?
My answer to that is, all those discussions are always based on what is good for the customer and what is good for execution. It is not based on anything else.
One question from Mr. Mahalingam. What is the rate at which we've hedged the receivables, and what is the outstanding value of the hedges?
The rate, as I said, we protect a certain rate. We leave the side. So the rate is closer to 52 rupees at this time. And we have over $3 billion in terms of revenue hedges.
Thank you.
Kritika, CNBC.
Chandra, I know you spoke about India. Considering India as a smaller fraction compared to the global pie, the fact that it is volatile and is likely to continue to remain so, will that be a concern on the numbers going forward?
So I think if the revenues don't grow substantially, then the portion of India business on the overall revenue will keep coming down. To that extent, it will not make a material impact. But having said that, for us, India should be a growth engine. Because we have invested here for a very long time, and we are continuing to invest. We are literally making investments every day in this market. So we would like to see India as a growth engine for us, so we have got to work hard at it.
Okay, Chandra, also just taking from Yasir's question, we've already had a detailed discussion on onshoring and offshoring mix. Going forward, if this continues, and if you probably, which you have been doing, you've been increasing your on-site hires, but is there some kind of threat to margins if there is any form of severe movement onshore, if at all that happens?
See, it's a very hypothetical question, so I can't answer. But fundamentally, I would say is that this is a business where the technology is changing constantly. And if you go by the last few years of technological changes, the rapidity with which the new technologies will emerge is only going to get faster and faster and faster, which essentially means you've got to invest ahead of the times. Second, the IT services business, with the advent of new technologies, will go through change in terms of business model itself. The cloud example of the life and pensions platform is a classic example. Or the cloud example of our SMB, ION, is a classic example. So if we have to invest in those technologies and be ahead of the curve in terms of creating business models, it is important that we operate at healthy margins. So that is a premise. So we have got to figure out a way of continuously enriching ourselves, building more capabilities, more intellectual content, and stay ahead of the curve so that we can operate at healthy margins. In other words, first you make a commitment to operate at a healthy margin. Then you've got to figure out what you need to do. If you're going to say that there is a headwind here, headwind here, headwind here, 3 headwinds, so drop the margin by 7%.
Okay, Chandra, just one last quick question. Of the several macro issues that we are facing, you've managed to mitigate several, and yes, last several quarters you have been able to outperform. In FY13, I know you can't give guidance, but what really is the key macro issue that you are concerned about?
I mean, you cannot pick any one macro issues. I think I would say that I would rather focus on worrying every single day about how can we be more relevant. That's a better way to handle it.
I just wanted a clarification on the exceeding the NASSCOM estimates. So just for the sake of clarity, depending on the cross exchange rates and the Indian rupee versus the dollar rates that NASSCOM had assumed in the April to June period, is that what you said?
No, before April. Before April,
it was in March.
Yeah.
It is not very difficult to figure out 2-3 currencies where they were. Yeah.
Fair enough. The other comment is that one of your peers made a statement today saying that from global corporations the kind of demand they see is very tepid and they don't expect too much out of it. But in your press release the statement is quite different, that TCS sees a lot of demand coming from global corporations. So just wanted you to elaborate on that.
As I said, I only can speak what I see. So that's our view.
When you say from global corporations, if you can tell
global corporations are our customer base. So we typically operate in a global 500, 1,000, 2,000 customer base. And so we have over 1,000 clients. I think to be precise, active clients are 1,032. And then we have investments in new markets where there are companies which are either global or becoming global or aspiring to become global, and we are partnering with those companies.
Just want some color on, you said that in terms of maintaining their systems, that kind of spending is what you are going to see, or do you think that they are continuing to invest in new technology?
So all these 5-6 areas we are seeing it varies from sector to sector, it varies from company to companies. There is almost a 2-stage growth in every sector. There are companies which are focused on efficiency, there are companies which are focused not only on efficiency but also focused on growth. Growth could mean new products, growth could mean going to new market, growth could mean a multi-channel, so that they can create a new business model to deliver their products or services. So there are a variety of things. A retail company does certain things, and banks also invest in risk management, for example, huge amount of investments on risk. So there are different things happening in different industries.
Vidya and Newswire 18 phones.
Just want to confirm one thing. You said you had hedged positions till the third quarter, right?
We are hedged until the end of December.
End of December, right? Okay.
So one more question. So today morning Infosys results came and the management commentary about the macro environment was very, it was of lot of caution. And what I want to understand from here, from you, is that are you seeing any delays in decision making? And are there any, the bigger deals like more than $100 million or 200 million? Particularly those kind of deals, are they happening? Are they coming? Or there is a lot of discussion in client. They are thinking a lot on those deals before giving.
So I think, as I said, I stayed away from making any comments on the macro, because macro is what it is, and there is so many things going on. There is a lot of commentaries available on what's going on in Europe, what's going on in India, what's going on in every other market. So I've really stayed away from making those comments. All I'm telling you is that customers understand that the macro is what it is, and they've learned to operate in that environment. So whatever is the plan that they have put, and they are acting as per their plan. So the decisions are getting made, deals are getting signed, and we have signed a few deals this quarter which are 100 million plus.
So how many deals have you signed?
She'll give you more color later. Okay.
Kenan wants one last stab at it.
Every quarter you say how many large deals you are chasing in the current period, and large, I think your definition is 100 million plus. So
No, that's your definition of my large. I have not gone on record saying. So I think this quarter we have signed at least about 8 deals, and I think we have given you numbers like 20 deals and all that every quarter, and always such number of deals in pipeline. And as we are getting larger, actually the number of deals that we are evaluating and we are bidding or we are discussing is always very healthy.
8 deals in the current quarter?
Yeah.
And what is your definition of a large deal?
No, we don't say that. It basically customer who has got the potential, a deal that can really grow significantly, materially for us. Thank you.
Thank you, ladies and gentlemen. Please join us for a cup of tea.